Hey guys, so today is September 9th, 2021. I just decided to make this class a recording in itself and not live um, because I have a lot to talk about. And I think it's better if I just have it as a recording because I want to kind of avoid the questions that people are going to ask so I don't get sidetracked because it's an important class and I want to make sure I can explain this to you in a way where, I'm kind of in my zone. So let's just start it off now. I'm going to pull up a chart of Amazon and share my screen here. So yesterday I had sent out an exam for you all to take, right? And for the most part, uh most of you sent in an entry, and I appreciate that I went over every single one of them. You guys did really, really well. There's no right or wrong answer in my opinion, because it's not like we're taking physics. It's not that, it's not like we're in high school anymore. But I just appreciate that you guys actually sent in an entry. It just shows how dedicated you are and how you're willing to get good at this. And I salute you for that. So what we're gonna do here, right? I'm going to pull up my studies and I'm going to add the studies that we use, which are the two EMAs, the 9 and 21 EMA. And I'm going to also pull up the stochastics oscillator, which is a stochastic slow, as you can see now. Okay, so what I'm going to kind of go over today is a strategy that you can use when markets are essentially at potential tops. Okay, what do I mean by potential tops? Now, I want you to really, really pay attention to this chart on Amazon. Okay, this is the daily. Now, let me pull it up on the weekly. Okay, so we are currently at a level on Amazon where we have struggled to break. And in the past, what has happened is Amazon has literally, it kind of fell off after hitting this level right here, this orange line. I'm going to make sure to remove all of the other lines so you can see the orange line more clearly. So this orange line that you see here, right? Every time Amazon has hit this line, it has rejected, right? So what is the one thing that can essentially help Amazon push up, right? Now, it's not necessarily going to be, oh, there has to be enough buyers tomorrow, this and that. No, you have to understand also the amount of money it takes to move a stock up, right? If this level here, which is the 35.42 level, if Amazon's 35.42 level is this strong, okay, then this means that it's going to take more than just Amazon buyers to help push the price up, right? What we're going to need is we're going to need catalysts. We're going to need different news to come on in regards to Amazon, right? And also overall, the whole market has to be on an incline, meaning the whole market in general has to be bullish, right? Because if you can think of the top three stocks that are the most weighted in the stock market, right? You can say, oh, we have Amazon, we have Netflix, we have Tesla, we have Facebook, Apple, the FANG stocks, right? FANG means Facebook, Amazon, Netflix, Google, right? That's what FANG means. Now, if the other big names have bad news or other big names do not have a significant catalyst to push themselves up, then Amazon will not be able to carry the whole market, right? So there has to be specific news in relation to Amazon for it to push up above this really big resistance, right? Now, I don't know if I went over this before, but as you can see, the momentum when the last time it hit the first high and rejected, the momentum was already bullish, right? The second time, the momentum was bullish. The third time here, right? The difference between this, and this is that in this case, we have not crossed over yet. So we're not even at the bullish mark yet. So there's a high chance that Amazon can push through this within the next week or two, right? And if you kind of think back, there has been significant news on Amazon lately, right? The whole thing with the payment processors, the point of sale, this and that, whatever, right? So it's always good to keep an eye on something like Amazon because it is currently at a very, very critical resistance, and this can potentially skyrocket back up to 3,700. And that's what you don't want to miss, right? If you're going to think about trading Netflix or Facebook or everything else that is already, because right now, as you can see, and we went over Facebook the other day, right? This thing has already broken out of its pattern, right? This thing is already slowing down. There's no point, in my opinion, to keep buying up Facebook calls until we kind of see a pullback, right? Now, when you're looking at pullbacks, what we're going to do is we're going to use the 9 EMA or the 21 EMA as a point of reference. So we're going to always assume that when we pull back, we're going to pull back to this line. So what we're going to do is we're just going to imagine, right? This is what I do. I try to imagine an imaginary line that's going to go like this, right? So that means I'm assuming that the pullback is going to be around here or here or here within the next 2 weeks, right? But just because Facebook might be pulling back doesn't mean Amazon's going to pull back, because like I just said, Amazon has had really good news in terms of the company in itself, right? And we are at a crucial level on Amazon, right? Now, going back to Amazon stock, right? It's used the 21 or the 9, if you can guess right now before I tell you, right? As a point of reference, meaning every single time we kind of retrace back down, it's always bouncing off of the one of these EMAs. And it's going to be the 21 EMA, right? Since we've already kind of bounced off of the 21 EMA, right? We have to assume that the price of the stock is going to keep going up, because now, since for example, if you compare this to Facebook, what we just saw, Facebook has not bounced off of the EMA yet. And what it's doing is it's trailing above it like this, right? But Amazon, we've already got the little wave down, right? Now we're just awaiting for the push up. So in terms of Amazon right now, regardless of what the whole market is going through, I think Amazon is going to be bullish within the next month. I think we can even break 3,700, right? But at the same time, we can't always assume that it's going to go our way. So we have to mitigate our risk every single time. Okay. Give me 1 second. I want to talk about, because I know some people kind of lost today, when with trading. I want to kind of talk about an aspect of trading that you might be overlooking, and that is the psychological aspect of trading. Before we even go on with more strategies, right? I want to go over a few things, right? When you're trading, right, you have to be meditative, right? You have to observe the market, okay? You have to analyze all the different variables that you already have access to, right? You have to also notice that your biases, your desires, and expectations are coloring that analysis, right? Meaning you also have to observe your emotions, right? You have to also acknowledge them. And you have to always stick to your trading plan, because sometimes your plan is not going to work out, or sometimes your plan isn't gonna, let's say you have a systematic strategy, and next thing you know, you see a trade, but it's not really going the way you would want it to in terms of what has to happen before what, you have to always stick to that strategy. If you have a systematic strategy and then A, B, C has to happen, but A happens and then B doesn't happen, but C happens, you have to just back off of that trade. You can't, sometimes people always feel the obligation to make money every single day, and you really don't, right? What matters the most is you preserving your capital and making sure that you don't lose money, right? It's better to not lose money today and to just sit back than to end up losing more than what you expected to lose because you were so eager to enter a trade, right? So you have to switch your mentality when you're trading, right? Every single time, for example, people take losses, right? They're too hard on themselves, right? You can't have that kind of mentality, especially with trading, because you're gonna lose, right? So you have to look at these different things that happen to you, and you have to think like, okay, these obstacles are my teacher. The obstacle is my teacher, right? And what I'm going through is gonna help me grow, right? So in terms of your trading journey, I feel like gratitude and perspective, right? And perspective is the most important part. It's going to make it a big difference in your journey as a trader, right? Because as corny as it sounds, if you want to survive the ups and downs of trading, you have to kind of have a philosophy behind your trading, right? You have like your trading has to mean something to you, because sometimes, and this has happened to me so many times, where I'm just continuously risking, and I kind of lose sight of the goal, of the main goal, right? I just end up wanting to make a certain amount, an X amount in a day, and then sometimes even when I make money, I'm not very happy because at the end of the day, I didn't even follow a plan, right? So you have to have a strategy that you trust, right? And you have to find a way to put your money concerns on a back burner, right? You have to reduce the emotional friction that you have if you want to be on your way to your goals, right? You cannot be emotionally attached to your money when you're trading. And that's the hardest part, because yes, I know, I understand, we all understand that you worked hard for your money, but listen, we're literally in a job, or I don't want to say job, we're in a this profession requires you to be emotionally detached from money so that you don't feel some type of way when you're down money, because you have to perform at an optimal level when you're trading. Am I not right? So this is kind of to help you kind of understand the psychology you need to have, right? You need to solve DISSOLV, your sense of self from time to time through meditation, because this is a stressful job. This shit is so stressful, and it can literally damage your psyche if you let it. Okay, I've seen people lose all their money and they go crazy, right? Some people end up, God forbid, they end up suicidal, they end up this and this and this. And it's sad to see, because this job or this profession that you're getting into is supposed to make you money, and it's not supposed to make you depressed, but it can make you depressed. So that's one thing that you have to be aware of. You have to take care of yourself, protect your mental health, right? Especially when you're doing this every single day. Okay, let's go back to the chart. Let's look at mRNA. Now, when we're doing analysis, right? When I'm doing analysis, I kind of try to picture different patterns that might reveal itself in the future. For example, right? If I'm looking at this, what can potentially happen is we can potentially have a bull flag and we can potentially have a cup and handle, right? That might happen or that might not, right? That's me looking at it from a daily perspective. If I'm looking at it from a weekly perspective, right? What do I see here? Well, I see that it's breaking out of a triangle, right? That is breaking out of a triangle. And if you want to figure out the size of the pole of this chart, you have to create a pattern for a previous pattern that it has broken out of. So for example, like this. So now when we're looking at mRNA, this is the size of the pole. So from 250 to 447 is how much this can potentially move up by within the next 1 to 3 months, right? Now, the only way I'm going to trust my analysis and actually swing calls on this trade is when the stochastic is above the 80 on the daily, on the weekly here. Once the stochastics is above the 80 on the weekly, then I will essentially swing calls on this going about 3 months, 3 months away, right? Now, you have to pay attention to where the tops are. For example, this thing ran up to 497 that week, right? What I like to do is I like to kind of look back in time and ask myself, why did this go up that much that day, right? What kind of news did it have that week for this to move up so dramatically and so tremendously in a week span of time, right? And then I try to cross-reference that with what's going on right now. And then what I try to do is I try to make sense of it all, right? Because now we're kind of getting closer to that high mark. So what I'm going to try to do is tonight, what I'm going to do is I'm going to go look at different news that Moderna has had in the past. And I try to see if it's relating to what's happening now, right? And I have to also see, for example, if you don't know what Moderna is, right? I hope you guys know the companies that you actually trade, right? Because this is where it kind of goes back to the sectors of the market, right? Moderna belongs in the healthcare sector, right? Now, what I like to do is if I'm looking at the healthcare sector, I want to go through multiple stocks that has to do with healthcare, like UNH, CVS, right? And I want to see where they are on the weekly as well, because what can happen is we can be going through a sector rotation, meaning different sectors will rotate in terms of the movements. So and it can also be a seasonal rotation as well. For example, one month we can have a good healthcare move, uh, uh, you know, across the board from all the healthcare stocks, and then 3 months later we can have a good move from the tech sector. So what you guys have to understand is you have to, how do I put this? Whenever I do something new, right? Whenever I'm doing something new, whenever I'm getting into a new business or whenever I'm learning something new, I want to make sure that I know every single aspect of that business for me to be confident in what I'm doing. And what I'm trying to tell you is I suggest that you all on your free time to kind of look up as much research as you can about sector rotations, about stocks in general, but mostly options, right? And how options move. Because once you understand that, because some people don't even know what they're doing, and that's not a good thing to do, right? Because you're all in this class for a reason. You're all in this class to learn how to do it yourself, but you have to also make the effort when you on your free time. I used to literally go, I used to spend 2-3 hours a day minimum looking up things online to make sure that I know what I'm doing. Because if I'm gonna put my money where my mouth is, I want to know that I want to be able to be confident in everything that I'm doing when it comes to trading. Okay. Also, sorry for that. I was doing something. I want to talk about companies when it comes to small cap, medium cap, and large cap. If you guys can, answer this to yourself, because obviously I'm not live right now. The companies that we trade are mostly large cap companies, right? Why do we only trade large cap companies, right? We only trade large cap companies because in the financial world, they're looked at as core investments. They're core stocks that are, so core stocks are stocks that have shown to be profitable and they have a history of solid returns, right? Large cap stocks, examples are Amazon, Microsoft, Apple, Netflix, right? Now, when you're looking at this in an investing term, right? Or when you're investing into large cap stocks, when I'm not talking about trading, I'm talking about investing. This is considered conservative because large cap stocks reduce your portfolio risk because they cost so much, right? It's not as aggressive as small cap stocks, right? Small cap stocks are like, mini, like little mini companies that have a capitalization of, 300 million to $2 billion. So these are little companies that cost like, a dollar a share, 50 cents a share. That's more risky, right? We don't trade those kinds of stocks because small cap stocks usually do not have options. They don't have options chained to them, right? They don't. The market makers do not offer option contracts for small cap stocks. I want to give you guys an example of a stock that has literally skyrocketed and you could have made so much money if you had traded it, right? I didn't trade it, but this company is called ENPH, right? Let's talk about ENPH here. This is just to give you an idea of the type of money that you can make if you really, really pay attention to what you're doing and if you really, really put your mind to it, right? So Enphase, right, is a solar company. Okay. They sell micro inverters. So what micro inverters do is micro inverters convert direct current electricity into standard electricity. Now, the crazy thing about Enphase, before the solar industry kind of went nuts, because it's been going nuts for the past 10 years, right? They were at the brink of bankruptcy, right? Now, as of 2020, they earned their spot in the S&P 500. What is the S&P 500? The S&P 500 is a list of the top 500 companies in the stock market. Now, going back to why I'm talking about ENPH, in 2019, ENPH had a market cap of 700 million. Okay. Now, in 2020, had a market cap of 4 billion. In 2021, right? Guess how much their market cap is now? It's around $26.7 billion. This company went from small cap to large cap in almost 2 years, right? Now, the reason why I want you to understand, and the reason why I'm talking about solar, this and that, is that if you spend enough time to do research and stuff, you can catch these types of companies that have a lot of potential to move up, right? If you were trading ENPH, if you had bought ENPH, for example, in 2018, ENPH was trading at $2, okay? It went up to around 200 something dollars now, a few months ago, okay? So if you had invested $10,000 into ENPH at that time, you would have made around $1 million this year, right? It went from $2. It went from a $2 stock to almost $300. So I personally almost caught this stock, but I wasn't really, as of like 2018, 2019, I wasn't really, I was trading, but I went through a phase where I felt very, very, very cocky about myself. And I just felt like, I'm like, I'm not even going to do research anymore. I'm just going to trade every single day. And that's where I went wrong, because I knew this company and I had shares. I had about, I want to say 150 shares at the time. I wanted to buy more, but I didn't really believe in the company itself, right? And this ties in to trading options, because the fact that I kind of got too carried away with myself in terms of I got too cocky. And just because I was making money every single day, I was like, what? I don't even need to learn anything else anymore. Right. And I missed this whole thing and I could have made a lot of money. And that's my mistake. And what I'm saying is I can compare this to how hard it is, how hard I'm working to be better at trading, because sometimes when you think you're too good at something, you don't want to learn anymore, right? And there is always, always, always something to learn every single day. Every single time you do research, there's always a new thing that you can learn, right? You have to be a sponge when you're trading, especially when you're learning different strategies or when you're trading every single day. You have to make sure you try a lot of different things so that you can have multiple arsenals. So you can have multiple uh um you can have multiple tricks up your sleeve, for example, right? Because sometimes one strategy is not going to work, but if you know another one, that might work, right? And that's the most important thing that you need to understand, other than the fact that you don't have to trade every day, right? Give me 1 second. Sorry, I had to go to the bathroom real quick. I'm gonna go back to my chart and I'm gonna show you some things that you can do when you're kind of scalping or day trading, but you're kind of you want to be in and out fast, right? Now let's take a look at mRNA and let's take a look at an example that you can learn. So you want to pull up the 5 minute chart, right? I like to look at the 5 minute, 5 day, right? Let's say today has not happened yet, right? Let's say we're still in pre-market and the market's about to open. So if you are trying to trade the open of the market, what you need to pay attention to is you need to pay attention to only the past 2-3 days, right? For example, in this case, right? I'm going to zoom it out so it's better for you to see. There are going to be different patterns that you see on the chart that you can kind of take advantage of. And I'm going to show you something here that you might be confused about. So I can make this line, like this if I want to, right? but I want to make sure I'm touching the resistance part, the resistance portion of the pattern, right? Now, when it comes to mRNA, what you can do is at the open, right? Sometimes, like I told you before, you can trade the pre-market high, which is here, right? Or you can trade the complete top of the pattern, which is here, right? But what that means is you're missing out on $10. But what I'm trying to tell you is this is a good enough gap in itself for you to trade the pre-market high and have that profit target from the previous 2 days, right? And this is only, for example, this is only good for in and quick in and out trades. Now, sometimes what can happen is the price might end up rejecting right over here. Why might the price reject there? It's because we're still trading within the pattern. Okay. So if we're trading within the pattern, that's the risk that you're going to have to take, right? The breakout of the pre-market high is at 429, right? But for example, like I just said, sometimes you might not want to wait for it to go to 439 because there is no way for you to know if mRNA was going to skyrocket the first 5 minutes today, right? So this is why it's always important to buy more than one contract, right? If you cannot buy more than one contract of an option, then you should not be trading that specific stock. The reason why I like to buy more than one is so that I can size up and size down, right? Because if I got rejected here at this line, yes, I'll end up losing more money, but I'm still going to have an average buy at 429 if I was to re-enter the trade later on, right? So when you're going to do in and out trades in a matter of 5, 10, 15 minutes, you have to focus on the previous 2 to 3 days. And that's what I do. And that's why I'm successful in what I do, because if there is not a good level for me to take, I won't take it. Regardless of whether the stock is going to go skyrocket $30, $40 today, right? Because sometimes if you steer away from your plan too many times, you start getting comfortable with not following a plan. And what that's going to do is, in the long run, it's going to fuck up your mentality and you're not going to end up being profitable at all because you're not following a plan, right? And the more times you lose, the less confidence you become. So I would rather miss out on a trade because it didn't show me what I wanted to see in terms of my strategies, rather than just taking it and assuming every single day now the same thing is going to happen. Okay. Let's look at some candlestick analysis on the 1 minute chart. And this is going to be a very important topic. So depending on where your entry and where your exit levels are, right? Depending on where they are, you need to focus and pay attention to the candlesticks in itself before it hits that certain level. So let's say our entry was at 429 here, right? Let's say this is our entry, right? Why was this a good buy if you're looking at it from a candlestick point of view? Is because you have a candle that looks like this, right? The longer wick on the bottom means that there is more buying pressure than selling pressure on this specific time frame, right? In that specific minute, if you were reading the tape, you would see that there are a lot of buyers, right? You will see like a lot of flashes of buyers coming in, right? Now, what about this one here? if you see a hammer, right before a resistance point, and the stock has not yet broken its ATR, then that means it is a good trade to take, regardless of whether it's broken out or not. Most of the times I like to trade breakouts before the breakout even happens. And sometimes I tell people not to do it only because I want people to kind of get comfortable with trading things before they break out, or getting comfortable with trading things after they break out, because sometimes you do need confirmation and sometimes you don't, because you never know what's going to happen next. So in this example that I'm showing you, I want to trade the hammer before the breakout because first of all, I'm going to take advantage of the Vega and the IV, right? So I'm buying in at a cheaper price before it breaks out, because for the most part, when people are trading, they're going to try to enter after the breakout, right? And obviously, yes, if I enter before the breakout, I can end up losing more, but it's a risk that I'm willing to take. Now, if you're entering this trade here at this level, let's say you're entering around 437, I'm going to make a line. If you're entering around 437, where would your stop loss be? So in this example, my stop loss is going to be below the hammer itself, right? That's my first stop loss, right? My second stop loss is going to be the moving average that is the furthest away from the 9, which is, the 21 EMA. So my second stop loss would be here. Now, let's say I entered this trade, right? It went up. Yeah, I'm up a little bit. And then it performs this pattern. Some people, and I don't understand why, some people will end up selling their position because it's not going up as fast as they want to. But no, what I do is if I see a pattern like this, right? Because first of all, you have a little flag here, and then you have a bounce off of the 9 EMA, regardless of whether it's a red candle, right? Red candle or not. Well, what's happening here is we're establishing this 437 level as a level where buyers are coming in, right? And so what I would do is, as soon as this candle closes and as soon as I see a candle that's breaking above this 439, I'm going to end up sizing more into the trade. This is how I end up making more money, because I like to take risks like this. I like to wait until the stock has a significant pullback, and then I want to enter at the breakout of that pullback. As long as the pullback is not far enough, it's not too far from where I entered, right? Because I entered here and the pullback is slightly lower than where I entered, right? This is the problem with people. Once you have an idea of where you want to sell in terms of a loss, you should not panic about the trade not going your way at that time, right? So in this example, what I'm going to do is I'm going to end up buying more contracts, probably like a few more, and kind of try to ride the wave to the top, right? Now, my first profit target on this, and this is where I need you to pay attention now, because the reason why you have multiple contracts is so that you can end up trimming, right? When you trim, you're just securing your profits. That's what's the most important thing. Because if you just have one contract, right, it's kind of hard to be like, oh shit, should I sell later? Should I sell now? I don't want. And then what happens is you end up missing out on your profits, or you end up giving too much back. That doesn't happen when you have multiple contracts and you trim, right? My first exit will be this top right here. This green candle. That's the candle that that's the candle after I entered the trade, right? The first candle that showed up that had a top. So this resistance is going to be my, sorry, I just freaking lost my track of mind. So this resistance that I see is going to be my first profit target after entering at this bull flag level, right? And it might not be much profit, but I still do it anyways, because it doesn't matter if I'm up 4, 5, 10% on a trade, right? Especially if I'm just trimming because I still have more contracts to begin with, right? So what I'm gonna do is I'm just gonna take 2 contracts off and then leave the rest running. Now, once I pass, right? Once I pass that level again, right? That's where I'm gonna size up even heavier because what happened before? Sellers came in and pushed the price down, and now it's going back up, right? It's going back up. I'm gonna end up entering more. And one thing that I want you to know and to focus on is to see the volume that the stock has, right? In correlation to how many, in correlation to, for example, the past 3-4 bars. So here in this example, this breakout candle itself had a lot more volume than the past 4 bars. So that tells me that the volume is significantly higher at this breakout level than it was when it was consolidating into a pullback. Let's look at one more name. Let's look at Boeing. Okay, with Boeing, when it comes to focusing on the candlestick aspect of trading, right? If you're looking at the pre-market high here of Boeing, where is it? 1 second. Pre-market highs around here. Now, as you can see, there's a difference between what happened here and what happened to Amazon or Facebook and their pre-market highs. There is not a lot of action on Boeing during pre-market or after hours, right? Sometimes if there is not too much action, I don't really want to use that pre-market high as an entry level, because the reason why I use pre-market highs as entries is because a lot of institutions trade with each other, or a lot of big money, they buy in and out, or they buy, they might sell their positions to another fund, and that's what creates the big candles on the pre-market and the after hours. If there's no activity on the pre-market, I don't really have an idea of whether there are more buyers or more sellers, right? Because it's just, you're just looking at little candles like this. Now, but what I do is I focus on the candlestick patterns, right? When I'm looking at, if I don't have a specific entry level from pre-market because there are no institutional buying during that time, I'm gonna stick to my candlesticks, right? So I'm gonna wait for a pattern to form, right? Obviously, in this case, I wouldn't wait until we get over here, right? And I'm willing to wait, right? I want to make sure I see a setup that's good enough for me to take. So in this example, we have a flag, right? We have a flag, and then we have a crossover here. So we have the stochastics crossing over as we made that bounce off for the EMA, right? And just focus on the candlestick. So just look at this candle right here, this green candle that you see. This candle itself has significantly more volume than it did the past 4 minutes, right? That's one thing that you need to understand, and that's one thing you need to focus on when you're trading using candlesticks. I want you to try to use this strategy tomorrow, which you're using a candlestick strategy tomorrow for 0-day expiration, and I want you to tell me how it turns out. Okay, we're gonna have class again tomorrow, September 10th, and it'll be at 6. It'll most likely be a live class, and I do have materials that I want to give you guys over the weekend.